December 9th could change everything for silver and gold investors. In just 72 hours, the Federal Reserve will make a decision that could send precious metals prices soaring. The markets are already pricing in an 87% probability of a rate cut. If you own silver or gold, or if you have been thinking about buying, you absolutely need to understand what is about to happen this week. Stay with me because I will reveal 3 specific scenarios that could play out after December 9th. And one of them could trigger the most explosive rally in precious metals history. Ladies and gentlemen, welcome to Gold and Silver Expert, your trusted source for premium gold and silver market analysis, price predictions, and investment insights. If you are new here, make sure to subscribe and hit that notification bell because this week is going to be critical for precious metals investors. I will be posting immediate analysis right after the Fed announcement on December 9th. The Federal Reserve is scheduled to hold its meeting on December 9th and 10th, 2025. This is one of the most important meetings of the year because it will determine the direction of interest rates. Interest rates have a massive impact on precious metals like gold and silver. When the Fed cuts interest rates, precious metals tend to perform exceptionally well. Let me explain why. Interest rates represent the opportunity cost of holding assets that do not pay interest, like gold and silver. When rates are high, investors can earn decent returns in bonds or savings accounts. This makes gold and silver less attractive. However, when the Fed cuts rates, those safe returns become smaller, and suddenly precious metals start looking much more attractive. Lower rates also weaken the U.S. dollar, which makes gold and silver more affordable for international buyers, increasing demand and pushing prices higher. Now, here's where things get really interesting. Silver prices have already surged to approximately $58 per ounce as of early December 2025, representing about a 100% gain for the year. Silver has literally doubled in price this year. That is an extraordinary move. Gold has also been on a tear, rising about 60% this year and trading near all-time highs. But is this rally over, or are we just getting started? I firmly believe we are just getting started, and the Fed rate cut on December 9th could be the catalyst that takes us to the next level. History shows us that Fed rate cuts are extremely bullish for precious metals. Let us go back to 2019. The Federal Reserve started cutting rates in July of that year. At that time, gold was trading around $1,400 per ounce. Over the next year, as the Fed continued cutting rates, gold rallied to over $2,000 per ounce. That is more than a 40% gain. Silver had an even more dramatic move. In 2020, when the Fed slashed rates to near zero, silver was trading around $12 per ounce in March. By August of that same year, silver had rocketed to $29 per ounce. That is more than a 140% gain in just 5 months. The current market setup is incredibly bullish. Silver has been running a massive supply deficit since 2021. We are talking about an 820 million ounce cumulative deficit. That means demand has exceeded supply by 820 million ounces. You cannot keep drawing down inventories forever. At some point, prices have to rise. The supply situation is critical when you look at where demand is coming from. Solar panels alone consumed 243.7 million ounces of silver in 2024, which is more than double the amount used in 2020. Solar energy is growing exponentially. Every solar panel requires silver, and there is no substitute. Electric vehicles are another major source of demand. As the world transitions to EVs, silver demand continues climbing. Technology sectors like 5G and artificial intelligence data centers also require massive amounts of silver. On top of industrial demand, investment demand has been surging. Central banks have been buying gold at record levels. Countries like China, Russia, and India are adding to their reserves, diversifying away from U.S. dollars. This central bank demand provides strong support for gold prices. Right now, we have geopolitical tensions, government debt at all-time highs, and inflation concerns. All of these factors make precious metals attractive. So what happens when the Federal Reserve cuts rates on December 9th? Let me paint you three possible scenarios. Scenario number one is the base case. The Fed cuts rates by 25 basis points with neutral language. This is what the market expects with 87% probability. Even in this scenario, I believe we would see a positive reaction. Silver could test $60 and gold could push toward $2,700 to $2,750. Breaking to new all-time highs would be psychologically important and attract more investors. Scenario number two is the hawkish scenario with about 13% probability. The Fed pauses and does not cut rates. Maybe they see economic data suggesting the economy is stronger than expected. This would disappoint the market, and we would likely see a pullback. Silver might drop to $52 to $54 and gold around $2,500. However, even if this happens, it would just be a temporary setback. The long-term fundamentals remain incredibly strong. A Fed pause would not change the supply deficits, industrial demand, or macroeconomic factors driving this bull market. I would view any pullback as a buying opportunity. Scenario number three is the dovish scenario. This is the exciting one. The Fed cuts rates by 25 basis points, and Jerome Powell signals more cuts are coming in 2026. This would be incredibly bullish. Silver could make a run at $65 to $70. Gold could quickly move to $2,800 or even $2,900. A dovish Fed would weaken the dollar, which is very bullish for precious metals. There is also potential for a short squeeze in silver. The silver market has significant short positions. If we get a strong dovish signal and silver rallies hard, short sellers would be forced to cover, adding fuel to the rally. Regardless of which scenario plays out, the long-term outlook remains extremely bullish. The supply deficit in silver is not going away. Industrial demand continues growing faster than new supply. The transition to green energy is accelerating. Governments have committed to net zero carbon emissions, requiring massive amounts of solar panels and electric vehicles, all needing silver. On the gold side, central bank buying shows no signs of slowing. Government debt continues climbing to unprecedented levels. The United States has more than $34 trillion in national debt. This debt will be dealt with through inflation, and gold is the ultimate hedge. Let me share some price targets analysts are discussing. For silver, targets range from $65 to $95 over the next year based on supply deficits and industrial demand. Some very bullish analysts talk about $100 silver if we get a perfect storm. Remember, silver hit $50 in 2011, and fundamentals are much stronger now. For gold, many analysts look for $3,000 within 12 to 18 months. Some targets go as high as $4,500 to $5,000 by late 2026. What should you do? If you already own precious metals, do not panic over short-term volatility. You own these metals as insurance and wealth preservation. Hold through volatility. If you do not own any, but have been thinking about it, this week could present opportunity. Many advisors suggest 5 to 20% portfolio allocation to precious metals. Consider dollar cost averaging to build positions gradually. If you are heavily invested, think about risk management and whether your allocation has grown too large. You can own physical coins and bars for direct ownership, ETFs for liquidity, or mining stocks for leveraged exposure. Physical gives you control with no counterparty risk but requires storage. ETFs trade like stocks and are very liquid. Mining stocks offer leverage but come with company-specific risks. Watch the Fed announcement at 2 p.m. Eastern on December 9th. The statement will reveal their decision. Then Jerome Powell holds a press conference. Pay attention to his language about inflation, the economy, and future policy. The dot plot showing rate expectations will be important. Expect volatility as markets digest the news. This week is critical, but remember the bigger picture. Long-term fundamentals for gold and silver are incredibly strong. Supply and demand dynamics, monetary policy, government debt, and geopolitical uncertainty support higher prices. One Fed meeting does not change these multi-year trends. Thank you for watching. Hit that like button and subscribe. Turn on notifications for my analysis right after the Fed announcement on December 9th. I will break down what it means and what you should do. Leave a comment below with your predictions. This is for educational purposes only, not financial advice. Do your own research and consult a financial advisor. I believe precious metals have a place in diversified portfolios, and the current environment is very favorable. The next few days are extremely important. I will be here to provide clear analysis. Thank you again, and I will see you in the next video after the Fed announcement. Stay informed and keep stacking that silver and gold.